Hi traders and welcome to the Technical Analysis Market Watch on Friday the 3rd of February. So I've seen some really good moves on the indices and some of the key players in the currency markets this week. And look, it's a non-farm payroll week, so let's see if we can identify any trades for today ahead of non-farm payroll or early into next week when non-farm payroll numbers are out and we really know where we're at. So we'll start out here with the Aussie USD, and look, as you can see, we've hit that level again, the 71 sort of 30 area. Very strong resistance there. There's no question about that. The very strong resistance is at 72.50, but we failed to break the first resistance zone. This little pullback is not really a surprise because, you would expect that we're going to see a little bit of problems around this point here, especially with the dollar index starting to strengthen again. But what we can certainly expect, if we do get a close above the 71.50, the 72.50 is going to be a pretty reasonable target. And there's not much there in the way of, really resistance that's going to stop us from getting there fairly quickly. So I do like the trade up because I think we've got still a very strong level of higher highs and higher lows. There's no question about that. The pattern has been a very orderly pattern all the way up. And if we do get a close above the 71.50 on the daily chart, I think that really opens us up to some pretty good trading next week up to the 72.50. I think it will find problems there. There's no question about that, because that resistance is there right from this point onwards here. So, but in saying that, the scalping opportunities are going to be good. The good thing about when a market comes down in an orderly fashion, which it did all the way from its highs, it does create all of these mini zones that make it very easy to trade. From a scalping standpoint, it's very easy because your targets are very clearly defined and your stop losses are very clearly defined. So realistically, you can't really screw it up as long as you're trading in the direction of the trend and you know where your targets are. But I think it's very important to isolate these areas and know where the problems are going to be. Now, as an example, when you see a series of higher highs and higher lows like this, and you see a pullback down to a roll reversal zone, which we know is here, there's no question about that. The very first target that you're going to aim for from a scalping standpoint is the previous high. And that one got taken out in the next candle. So it creates a very easy trade. That's like 110, 120 pips, depending on where you got in. So even though this is actually the main target, the 72.50, you're going to have problems here in the first touch. So at the very least, you're going to get there. So, and that's when you're scalping, that's all you really want. So that is your first trade. Now, if it does get up here and break the 71.50, then we're going to start targeting the 72.50 because obviously there's nothing in between that's going to give us too many issues, you wouldn't think. So we should be pretty smooth sailing from that point. Now, I wouldn't really be looking for the shorting opportunities on this one until it's actually trading below the trending moving average. I'm not a big advocate for trading against the trend. So, and you're in a strong trend here. So really, I'd be waiting for the pullbacks and the breaks to the new high, and then we know where we're going. But if we get a break below the 70-cent mark, again, we're trading both the 20 moving average and the 70-cent mark, very different story. Then all of a sudden we'll be starting to target the lower moves. But a lot has got to play out. The move up is far more lucrative on this one. So a good trading on the Aussie, and I think hopefully you were able to get that target because, it's a pretty straightforward target. Let's move on over to the US dollar CAD now. And look, this is just playing the game as well. Just easy does it. Lower high, lower low sequences, 20 moving average pullback, sell, 20 moving average pullback, sell. No big deal there. Target is a very strong one. That 132 level, just above the 132 level, is a very strong and sustained target that I'm still pretty keen on. We've got a 200 moving average there ready to catch it as well. And as you can see, look, it's doing nothing to give us any indication it's going to go higher. So realistically, go to the smaller time frames, look for pullbacks to the 20 moving average, and then we're effectively trading in that direction. The only way I would be looking to long in this, similar to the Aussie, is if it actually gets a daily close above the 20 moving average, and then we get a series of higher highs and higher lows on no less than probably a 4-hour time frame. Really, I wouldn't be going much lower than that because this is a pretty strong downtrend. Even though it looks like it's doing it slowly, it's actually been sustained for quite some time. And realistically, we've got a target that's not very far away. MACD is definitely still selling off. Tells that the 12 and the 26 moving averages are still separating. They're fairly fast moving averages. So the momentum is still definitely with the move down. So realistically, look for pullbacks up to a 20 moving average on the downside on a 1-hour chart or even a 15-minute. If you want to scalp, you're still trading inside the range there, and be aiming for the very first strong support. This is the strongest support you're going to see in quite a while on the CAD. So that's what we're aiming for. But if we see a daily close above the 20 moving average in the next few days, look, that can happen. A non-favorable, non-farm payroll result could make all of these US dollar-based pairs, rise up pretty quickly. It can happen. I've seen it happen a lot. And if it does that, then all of a sudden our next target is around that 135 again. So a really good range, I think, but it's got a bit of work to do on the upside. And until we get a daily close above the 20 moving average, not going to be looking at that. All right, we'll move over to the US dollar yen, and this one's been playing the game nicely as well. This channel's been in place for a long, long time. For all of its faults, from a technical standpoint, this girl's been behaving very, very well. And realistically, it's giving us no reason to worry about what it's doing at the moment. We know that we've got support here at the 126.80 area, 127. Still a little bit to go to get there, but, the lower highs and lower lows are still in play. There's no question about that. This took a little bit longer to actually start shorting. I actually did a Tuesday Market Watch video on this, anticipating this move and pushing it down. It's taking a little bit longer, but it's certainly well on the way now. And the good thing about this is, the market is behaving itself and still in a very, very strong downtrend, and there's no reason to be looking at moving up. Now, the only thing that would convince us that this channel is broken, obviously, is a break to the top of the channel. But more than that, it actually needs to close above these levels here. It needs to close above the 130, 180 to 132 level again to get all of this, because there is very significant resistance here at around that 131. 80 to 132 level. You can see here we've got very strong support at three different levels on a daily chart. And we've got resistance at this point here. So in my mind, we really need to break that zone before we start to get excited about a long. So I wouldn't be just taking a break of this channel and a break of the 3130. I'd be looking at the 131.80 to 132 before I'd get excited about going long. And if it does, then obviously the clear target is going to be the 134.60 to 80 area, which is a pretty decent zone to aim for. But it's got a bit of work to do that. But then, of course, you're going to have the lightning bolt that we're looking for to actually make that happen. So that's the easy target here. But the easy trade still, of course, is the short. And if you want to get in on a trade like this, if you're not already in because you may have missed the initial move, just go to the smaller time frames. Look for a 1 hour chart. Look for a pullback to a 20 moving average. I say it every day, week in, week out. And I say it because it works. It's the easiest way to trade. In the direction of the trend, pullback to the 20 moving average, and you are set. Okay, so just keep an eye on this one. Look, MACD's starting to lift a little bit because we've seen a bit of flatness, of course. That tells us that the 12 and the 26 moving averages are getting a little bit closer together because the market has stopped accelerating down over a period of about a week and a half. But again, it's really just a bit of a watch. But again, this is a very strong resistance here. If it breaks that, it's really telling us something. Over to the dollar index now. Look, it broke a very key level of support. There's no question about that. But what it's trying to do now is, really get back up there. Now, what we're always looking for, and this is why I'm always nervous about the first break, and I very rarely trade it. It's always better to wait for the retest of a zone before you get in. I don't want to be the first person there fighting the battle. And if you were, you've got to be very conscious that this can happen here. You've got MACD divergence happening as well. I still think that we've got potential shorts on the US dollar, on the dollar. Don't worry about that. I still think that we're potentially going down, but this is not where I want to be in. Okay, so really what we want to see now is it to prove itself, make a series of lower highs and lower lows. If it gets up and closes above the 20 moving average again, we'll be looking at this with a very different lens next week. Okay, so one to watch. But look, the euro is the real story there, I guess, because that's the one we're going to trade. It's been in a very, very strong uptrend, as you know. It hit a very, very key zone. No question about that. Yeah, we know it's a role reversal zone at around that 109 sort of 50 area. It went up above it, but again, they often overshoot when they're in a big hurry. It's come back down fairly quickly. It wouldn't surprise me to see it test a 20 moving average again, and I wouldn't be panicking about that. If it does that, it may give us an opportunity to go long again. But again, if we do go long from this level with a series of high highs and high lows on a smaller time frame, all we've got to do is get back up to that sort of 109.50 as the first initial target, and we'll be sweet. A break, it would have to break 108 for me to be looking at shorts. That means it breaks a 20 moving average and a series of lower highs and lower lows on a smaller time frame to start looking at potential shorts on this one. Still a long way away from that. So we'll just keep an eye on it. But realistically, listen to price. I think that's all. The best advice I can give you is technicals and price lead the way. Don't worry too much about the news. If you get caught up in news, you're going to be looking for a reason every week not to get into a trade. But price action generally works its way around it. So, and probably no better example than that is on the obviously the US 500. It hit the very, very important level of 41.80. Yeah, and there's all sorts of reasons that why people say, 41.80 was going to be the target, for all manner of different things. But in reality, it's one of the strongest role reversal zones there is, and you can paint as many pictures as you like around this level. At the end of the day, when you look at it, it's very, very, very strong support, very, very, very strong resistance all the way through. It's been one of the most important levels in the last 3 years. No real surprise that it touched it and it's starting to sell off. Okay, and that's in the end, that's what it comes down to: support and resistance. When you keep trading simple, that's what gets you the results. In the end, we know we were in a series of higher highs and higher lows. 4,100 was the first obvious target, and a lot of profit would be taken there. I'd be quite happy to be taking mine there. But the initial target of 41.80 is a very, very important zone. And yes, do they overshoot? Sometimes they do. Look, ahead of a very, very important news event, obviously, with non-farm payrolls tonight, we had the Fed, be buoyant about what the market wanted to hear. But again, you don't want to play too much into what the news says. Look at the levels. If it's a very favourable number, and that doesn't mean it's actually a good number for the economy, it just means it's a good number for the market, and that's what the market wants to see, then we're going to see movement above here next week. Now, if we're trading above the 4,200 on Monday, I would still be inclined to wait for a pullback to the 41.80 and then look for a roll reversal zone from above it to below. Then we're looking for a series of higher highs and higher lows on a smaller time frame, and then we start pushing up to around that 4,300. I think there's still a good 100 points up there before we start to see resistance again. But if the number is not as nice as the market would like it, and you start to see a series of lower highs and lower lows on a smaller time frame, or indeed we're trading under the 41.80, I'd be cautious about going long on this one because realistically, it's a very, very important zone. You can see why it's so important, so treat it with a lot of care. But let's let the news give us the numbers, and then we'll trade the technicals accordingly. You don't want to be the first one in. Let it play out. Let it have a session with that knowledge. And then if we're trading above the 4,200 on Monday, then we start looking at 4,300 moves. And of course, if we're trending down and looking below this level on the Monday, I think we'd be starting to target some of these previous levels of around the 4,100 and 4,050, because I think they make a lot of sense for a little bit of a pullback. So just be very, very mindful. This is very strong resistance. So I hope you had a great week's trading. I think we've seen a lot more action than we normally do on a non-farm payroll week, but that's significant because of obviously the Fed talking. Let's see what we get tonight, and we'll see, hopefully next week, we'll start to see some more breakout moves out of these levels. Have a great weekend, everybody. I look forward to seeing you all next week.